Models, and thank you to all the participants joining on Zoom, LinkedIn, and YouTube. My name is Benjamin Clark, and I'm the Director of Operations for AFISIA. And first off, I'll be taking you through some of the key data points from H1 2026 for CNI Solar across Africa. Then I will welcome some experts from project developers, OEMs, and investors to discuss CNI market trends in greater depth. Um, Unless you are the speaker, a bit of housekeeping first. So unless you're the speaker, please keep your microphones muted and your cameras off. You can use the chat to network with each other and the Q&A section to pose questions directly to our panelists. Please, if you do post a question there, include the name of the people that you are addressing it to. And before, this is our most common question that we get, so I'm going to save you the worry. The presentation and recording of the webinar will be shared with everyone after the event. Okay, so we will kick off with a presentation of the major trends in African CNI markets, CNI solar markets from H1 2026. So here we're going to be looking at leading countries, regions, the major EPCs doing work, and kind of what the future looks like for CNI, C and I in Africa. So, huh, give me one sec. Yeah. Hang on. So there we go. Apologies for that. My computer froze for a second. So in terms of what we can see for CNI in Africa, so across all of the solar segments that AFCIA tracks, we have tracked a cumulative capacity of 28.51 gigawatt peaks. Of that, 11.49 gigawatt peak is CNI. So that's around 40.3% of all cumulative installations that AFCIA has been able to track. Now, here, the interesting thing is you can see that from 2020 to 2023, CNI solar was resolutely below gigawatt scale annual markets. This completely changed in 2024 and 2025, and this was largely due to number one, the dominance of South Africa in the CNI market, and the load shedding crisis that happened in that country, with also the removal of the installation size cap that had existed up until then, which allowed deployment at scale as well as the development of a wheeling framework that also allowed this. So for this continued from 24 to 2025. In H1 2026, we can see that almost a gigawatt peak of CNI solar has already been installed across the continent. This might seem a little bit of a slowdown compared to a little bit of a plateau compared to the rapid growth we've seen across 2024 and 2025. I will get into why exactly this is the case later. But that being said, looking at what has already been installed in H1 2026, we're looking at another gigawatt scale year. So CNI solar is definitely here to stay. Then, this is a little bit interesting because it kind of, if you look at the share of CNI solar annual additions, uh, for annual additions kind of across every single year, you can see that from about 2022 to 2025, CNI solar makes up roughly kind of half or 50% of all the additions of all the annual additions. The interesting data point here is 2024, because remember that is the first year where the continent reached a gigawatt scale, installed about 2 gigawatt peak of CNI solar. but that only counted for 47.75% of all the annual installations, despite it being the best year for CNI solar. That's also because utility scale solar had a particularly good year that year, and that trend was reversed in 2025, where utility scale was a lot slower, and CNI increased its share to well over half. In H1 2026, what we're seeing so far for the deployment reflects what I was saying earlier. There's been a sort of plateau or a decrease in a lot of markets in the deployment of CNI solar, and that's being played out in its share of installations. We'll see where we end up at the end of the year, but so far we're seeing the effects of a kind of plateau and a decrease across several important markets from 2025. Now, looking at the top C&I solar markets and main contributing sectors in H1 2026, it should come as absolutely zero surprise to anyone that South Africa is by far and away the largest market, with 771.21 megawatt peak, or over 75% of the total installed C&I for this year. However, there are markets that I will show later that have kind of come out of nowhere to post some numbers, and there's some very interesting reasons behind that. I want you to remember, particularly in your heads, Zambia and Tanzania, because we will talk about them later. Then the top five segments for CNI solar capacity additions in H1 2026 are, it should come as no surprise that mining is the major addition. This is because mining facilities self-generate at scale far more than any other of these segments. The interesting one to note here is the growth of the data center segment. It has gone from almost nothing to now the third largest segment or industrial segment for CNI solar. We expect this to continue increasing as more and more data centers come online. So that is certainly one to watch. But don't worry, I don't think mining is going anywhere at all. This is only the top five segments. Of course, there are many, many more. But as you get further down the chain, it becomes smaller and smaller, kind of behind the meter and rooftop systems, rather than significant multi-megawatt developments. So now kind of looking at the average size or the median size of CNI solar projects from 2020 to H1 2026. Here, I think it's interesting because you can see how much the kind of the overall continent performance in terms of size of projects is sort of driven by South Africa. Now, this went from very, very big projects of 310 kilowatt peak in 2020, and they've now kind of stabilized around the 200 kilowatt peak mark by H1 2026. And then you can see this, I mean, this bigger size is kind of to do with to do a lot with the types of customers in South Africa that use CNI solar, and the types of enabling frameworks the types of enabling frameworks that are possible in the country, such as the removal of the size cap, the wheeling regulations, and so on and so forth. Now, the rest of Africa, you can see, it has far smaller project sizes, and this is very, very much to do with, this is very, very much to do with the. Sorry, can anyone hear me? Can you hear me at all?
Yes,
We
yes,
can hear
we
you
can
very
hear.
well, Benjamin.
Okay, perfect. Someone sent me a message saying that they couldn't hear me. So, yeah, the smaller project sizes are much more to do with the types of customers that are coming in. In the rest of the continent, whereas in South Africa, wheeling is entirely possible. In the rest of the continent, there is a lot of focus on behind the meter. It's co-location of the power generation with the load, which means that there's less available land, and there naturally the project has to be sized accordingly. But yeah, this should also show you the dominance of South Africa in the CNI market across Africa. Okay, regional distribution of African CNI solar capacity. I'm going to sound a bit like a broken record, but the main things to notice here is that Southern Africa, the deployment here is obviously far bigger, and this is skewed heavily towards South Africa. We're looking at kind of a plateau at this point. From lots and lots of growth, yeah, load shedding has largely been solved. There's been 300 days of non-load shedding that Eskom reported. And then also you're seeing a plateau because, I mean, essentially, load grid infrastructure at critical load centers is becoming saturated, and the grid connection process is becoming more and more difficult in those centers. The big surprise that we see is that North Africa has completely fallen off a cliff. This is largely a Morocco-based story, and I will get into that in particular. West Africa is more or less stable, a little bit lower than we would expect. East Africa is already at 77% of what it installed last year, which is a big story, and I will get into which markets are moving there in a little bit. And Central Africa, the amount remains negligible. So yes, here you see South Africa, obviously for the reasons that I was saying, has kind of hit a plateau, and this is yeah, to do with critical infrastructure at load centers being saturated, the Eskom grid connection unit approval process being very slow as well. But there is still a healthy pipeline underneath, underpinning all of that. So if the permitting processes can be sorted, you are likely to see a speeding up in South Africa again. Now, all of the rest of the markets in comparison are tiny, but I want you to focus on Zambia here, which installed 2.88 megawatt peaks of CNI in 2025, and already in 2026 has completely smashed that total by about 10 times. And this is largely because of the reliance on hydro, the hangover effects from the drought that happened. People are turning to solar as a a good means of securing backup power. Then then also that there's been a lot of work in Zambia that is looking to liberalize the market further. And this has led to increasing numbers of business going for behind the meter solar, as you will see in the pipeline bit. Zambia is certainly a market to watch out for. So yes, while the numbers are not impressive next to South Africa, um, uh, it has already increased its amount of CNI solar by 10 times from last year. So this is a rapidly emerging market. So CNI solar in North Africa. Now here, the big story is Morocco did exceptionally well in 2025, and since then has really fallen off a cliff. This is largely because of a new legislative framework that is due to be implemented. Well, that was due to be implemented in June 2026. And the entire market was essentially on pause until that new legislative framework came in, and it was clear under what rules CNI Solar would be operating. Um, Egypt and Tunisia have managed to maintain a kind of a stable rate of deployment. And then Algeria and Sudan are far below that. But yeah, the performance in North Africa is seen as significantly worse this year because Morocco was leading the market and has since really kind of the market has reduced to basically nothing. We hope as the new legislative framework gets implemented there that installations will pick up again as people get used to the new reality. Now, in East Africa, the big things to notice here, Tanzania went from deploying basically nothing in 2025 to now I think it's about well, yeah, it's significantly higher amounts of solar. of CNI solar this year from 3.66 megawatt peaks to 16.31. This is largely because of the development of several critical bits of infrastructure. So there is a renewed focus on mining in Tanzania. There is also good railway links, which makes it easier to deploy projects and transport equipment around. And then also you've got a new SPPA program in Tanzania that is makes it easier to conclude this type of CNI deal. So that is why Tanzania has kind of come out of nowhere to now be the second biggest market in East Africa next to Kenya. The inverse is also true. So Madagascar was at 13.92 megawatt peak, which was reasonably impressive in 2025. This has now fallen off a cliff to 3.9 megawatt peak. This is largely due to the military coup that took place and the kind of political uncertainty surrounding that. We hope that things will become clearer in the future and that the CNI market will make a recovery. But for now, the military coup, the new military leadership yeah, things are yet to settle underneath them. Then in West Africa, we can see Nigeria. Nigeria remains a significant market. Senegal went from a lot to very little. This is largely due to their sovereign debt crisis, which makes it significantly more difficult to borrow money to finance projects and so on and so forth. There's no easy fix to this. But yeah, we hope that we see that the appetite is there in Senegal, and we don't foresee a recovery in 2026, but we hope that in the future there will be a return to these levels of deployment, which made it such a significant market in 2025. Yeah, Ghana has really stepped up its contribution from 3.48 megawatts to 16.85 as well. This is in no small part down to the current government's focus on renewable energy that has led to several favorable policies that encourage its adoption. But as you can see here, Nigeria remains by far and away the largest market in West Africa. Then let's look at leading EPCs in African CNI in H1 2026. The main things to notice here is really the diversification of where these EPCs are from. So, for example, China Energy International, it should come as no surprise to you that this is a company from China. Yes, they are doing the most, but Voltalia is a French company, and El Saudi Electric is obviously an Egyptian company. So you are really seeing a nice mix here of all different types of players getting involved in CNI in Africa, which just shows you the attractiveness of the sector and the rate at which it is becoming an important backbone not only for economic growth in individual African states, but also an important backbone of the continent-wide solar market. Then this is the pipeline for 2026 to 2028. So remember that figure that I told you at the start, the 11.49 gigawatt peak or so. Yeah, we've identified over the next 3 years more than double that coming online. And yeah, okay, the big story is South Africa. It is almost 12.5 gigawatt peak going to come online. But remember, I told you to keep an eye on Zambia. And yes, they're coming from basically nothing, almost less than a megawatt peak, now 20 megawatt peak. In the next 3 years, there's about 1.1 gigawatt peak of solar that is due to come online. Also, kind of coming out of nowhere is Zimbabwe that has announced 2.2 gigawatt peak of projects, where we hope that these will come online in the next 3 years. It remains to see whether all of them will make the finish line, but there is significant ambition. There is significant ambition there. Um, yeah, we see, kind of, we see Morocco, despite this new change in law, that has not stifled the appetite for CNI solar, and we see here with the 729 megawatt peak, a return to previously seen deployment levels. So the future is relatively good, and there's some markets that are coming out of absolutely nowhere to to now post significant numbers in terms of project pipelines. It's that Zambia and Zimbabwe that are the real outliers here. So keep an eye on those markets. Now, looking at battery storage, here we see the here we see basically the amount of battery storage that has been installed, along with the annual installations of CNI. So you can see that similar story to CNI. It was kind of around 2024 that those significant decreases in battery storage prices led to a far more rapid deployment of those. So you see over doubling between 2023 and 2024 to 256 to 257 megawatt hours, then even more in 2025 to 325, and in H1 2026, contrary to the sort of slowdown or the plateau, let's say, in CNI solar deployment, we don't see that in the battery segment. We're now, I mean, if you double what we have in H1 2026, you get more than 325. So this is really showing that kind of storage is now a significant driver of CNI solar rather than the other way around. Whereas the numbers for solar have plateaued, the numbers for storage are set to increase. So that is certainly good for it shows more and more companies turning away from diesel generators as a key component of their backup power strategy, and more and more towards battery storage, which is good news. Then a little bit kind of last few bits from me, and then I will hand over to our excellent panelists. But yes, the analysis of changing CNI market conditions in Africa. So there's several things that have happened across the continent, some of which I've gone into already in a little bit of detail, but this should give you a little overview of what is happening in the continent. So there's monopoly liberalization. So as I was saying, in South Africa, wheeling, it's basically the only market in Africa where it is really possible and operational. Means that there is now an evolution from behind the meter projects to grid scale supply. And this shows what happens when you unite policy with demand signals. You can really get some very impressive deployment statistics there. In Kenya, there were open access regulations in 2026, which okay, it's not the end. It's not the end stop, but it does expand opportunities for bilateral contracts between generators and commercial and industrial customers. Then we need to look at net metering programs. So in Ghana, this is very important for behind the meter CNI storage, CNI solar and storage, which is a significant, which is the majority of projects in the rest of the continent. There's an AFDB and Swiss-backed program that will basically support solar adoption for 750 SMEs, 400 schools, and 200 health centers. And in Namibia, there is a 500 kilowatt net metering cap, which that has been introduced, and this should essentially help more kind of mid-sized businesses or mid-sized loads access CNI solar on a more attractive basis, which is certainly good. So maybe we will see some more deployment in Namibia being announced. Um, then it's I mean, you don't want it to be the case, but grid failure does force regulatory catch-up. So in 2026, Nigeria introduced net billing regulations that helps anything from 50 kilowatt hour to 1.5 megawatt solar systems export surplus power through disco networks. This is not strictly speaking C&I, but it does also allow those behind the meter projects to add additional revenue streams to those elements. In Nigeria, the Electricity Act in 2023, you can okay, it's not the no cap as in South Africa, but essentially projects up to 1 megawatt are exempt from licensing, and this should certainly support adoption of CNI solar in the commercial segments, certainly, maybe in slightly smaller industrial segments as well. And that will help the current rate of deployment that we're seeing in Nigeria. And then, yeah, rules for large industry and fiscal incentives. So in Morocco, there is a new net metering system, and this is focused on high voltage users, and that should see larger CNI projects come online. This is obviously to support Morocco's industrial competitiveness, with an eye to the European Union's carbon border adjustment mechanism and kind of export-oriented economies towards Europe, export-oriented sectors, sorry. And in South Africa, there's several tax incentives that strengthen the business case for CNI rooftop solar. So this is by no means an exhaustive list, but this is an overview of what is driving some of the markets forward, and that is it from my side. I hope that made sense to everyone. Let me just check the Q&A before we go over to our panelists. But yeah, it gives me thank you all so much for listening to that. And I would like to now shift to our discussion with experts. It is my great pleasure to introduce our experts today. So Mr. Herbert Friese, the General Manager for Dutch & Co, a project developer in West Africa. Then we've got Rita Ori, the Business Development Manager for ICO, an OEM, and Bhupendra Yadav, Vice President from SEMA Funds, which is obviously an investor, and we will be picking their brains today about the growth of CNI in Africa and kind of their specific roles in that, and how they support it as well. So as a reminder, if you have questions, put them in the Q&A. If you want to talk to each other, do it in the chat. I will not be looking at the chat. I will be looking exclusively at the Q&A. So to kick it off, question to all of you. I've just given an overview of what AFISIA has managed to track in the African market, but does that picture match what you're seeing on the ground, or is there a gap between the macro view and your day-to-day reality? And I'd like to pose the question to Herbert first.
Good. Thank you very much, Benjamin, and thank you all for joining this morning. Thank you for it was quite interesting to see, let's say, the statistics that have been gathered recently, and to have the up-to-date numbers on the first half of 2026. From where I sit within, let's say, the center of West Africa, we're based in Accra in Ghana. There's a number of things that draw my attention. I think one of them is that I think we can easily say that for West Africa, the numbers are likely understated in your presentation, and there's a lot of activity going on that is not really measured nor, let's say, formally reported. So I think the good news for West Africa is that the numbers are likely to be higher than what we saw. It was also interesting to see that certain markets were not specifically highlighted. We know that Ghana, of course, is a growing market. We're at the beginning in West Africa of what we call the tornado of solar power and a tsunami of battery storage, which will follow automatically after that. But countries like Cote d'Ivoire, for example, have an enormous amount of activity at the moment, which I didn't see in the presentation. But that may be because it's captured within the whole West African context. The storage, with regards to the storage, you're absolutely right to say that this is the driver of CNI Solar. You could see, for example, during the most recent Intersolar in Munich, the enormous attention that is drawn towards battery storage by each and every manufacturer. But also what we see is that traditional PV module manufacturers and other manufacturers of different technologies are now setting in high on battery storage. And that is purely to do with the fact that, of course, the market is growing, prices are reducing, and we see the diesel dependency in West Africa, especially in countries like Nigeria and other. There is a massive promise for battery storage in the CNI sector. One thing that I would need to say as a point of caution is that I have the feeling that in the growth trajectory that we were presented, I have a suspicion, I can't say if it's true or not, that maybe there are some utility scale projects and CNI projects that are mixed up because of the growth figures that I saw in certain regions. I have that suspicion, but it would be interesting to dig deeper into that by reporting to each other in the second half of what's going on there and what has been going on. So in general, Benjamin, I would say, yeah, the macroeconomic trends are also compliant and for West Africa. The numbers, of course, are lower than what you see in South Africa and other areas of the continent, but we're growing faster than people think, and we can also see that in our pipeline, and we can see that in actually what's happening on the ground in West Africa. Thank you.
Thanks, Herbert. And yeah, absolutely. It is likely that there is more activity than we are able to find. And so it's good to hear from your side on the ground that West Africa is actually a hotbed of activity at the moment. Rita, I want to pose the same question to you. You're obviously coming from a more South African context, but you operate across Africa. What are you seeing at the moment compared to what AFISIA has found?
Look, overall, I would say it aligns very closely with what we're experiencing across Africa. The commercial and industrial market has evolved significantly over the last few years. Customers are no longer asking whether solar works, they're asking how quickly they can implement it and what the return on investment looks like. The biggest shift we're seeing is that businesses are looking beyond energy savings. They're investing in energy security, operational resilience, the long-term cost predictability. That the demand is driving larger, more sophisticated CNI projects across multiple sectors. That's just the way I see things, man, from my side.
No, I mean that makes sense, and kind of securing operational resilience against a kind of weaker grid or anything like that is obviously key to continued economic growth across Africa. Last but by no means least, before I turn to some of the questions that have appeared in the Q&A, Bhupendra, welcome, and yeah, please let us know what you're seeing from an investor perspective.
Yeah, so thanks, Benjamin. First of all, this is very insightful and Chris. And see, I mean, honestly, the way we have been speaking to the kind of customers and even companies, in fact, we have now been talking to directly customers also. And the kind of diversification is, I mean, we see this is very small, sometimes very big. So honestly, I mean, practically, it is very difficult to capture everything that comes out here. But nevertheless, I think, see, I mean, a couple of markets where we have seen a lot of extraction and that comes out also is like Zambia is one where we have seen a lot of work being done. Zimbabwe is one where, I mean, at least I see that numbers maybe higher than what you guys are reporting. DRC is that market. What is more, not from the number perspective, but more from the industry perspective, is a couple of markets which have been disappointing in a way. And I don't know, because your number also says the same thing, like Kenya, Nigeria. I mean, we expect a bigger number from there. They are bigger geographies, bigger economies. So there, I think the number is more disappointing. So that also, I mean, that is our experience also in when we talk to the people. We have not really seen much greater pipeline in that sense. There is a pipeline, but that is more subdued. On the pipeline also, I mean, I'm not sure how you guys work that way, but I mean, it like Kenya, I have not seen that pipeline at a bigger level. I mean, when you look at the next 3 years number, in fact, Nigeria is also there, but with not that sort of number. So, but again, I mean, these things will keep, I mean, evolving. And at least, I mean, last 4 years, the way we have been working here and we've been tracking the market, things are, I mean, as Herbert pointed out, it is changing very fast, I think. And the growth numbers are also evolving very faster. So, all in all, I mean, to me, it looks like, I mean, it provides, I mean, to large extent, a reasonable picture of what is happening in Africa.
Thanks, Bhupendra. And yeah, you're right. Yeah, it's kind of a fool's errand to try and forecast too far into the future, because yeah, things do change so quickly. So we've got a lot of questions in the chat that have just come up. So I would like to address these address these to our panelists. So a question here from Ange de la Victoire. From your experience, what lessons can countries like Rwanda adopt to accelerate commercial and industrial solar uptake among businesses, particularly in manufacturing, hospitality, and agribusiness sectors? I think I'll go to Bhupendra first on that, and then please, Rita and Herbert, if you want to contribute as well, do let me know. But Bhupendra, question for you.
Yeah. So, I mean, see, Benjamin, I'll be, I mean, not very specific to you, Rwanda, but in general, also the way I can see is, I mean, we have been seeing a lot of, I mean, issues on the equity capital. See, we are more like a debt provider, right? We provide debt financing. Many companies come to us, a lot of solar developers come to us saying that, okay, can you finance our customers directly? Like their businesses, right? I mean, their CNI customers. And that's where we see a lot of challenge on the capital. And more importantly, equity is something where, because there are very few funders who are providing the equity. And so that is one thing where, I mean, if there can be a better access to capital, be it debt or equity, I mean, we are trying to solve that issue from our side. But on the equity, I'm definitely thinking that there can be a lot more work. On the regulatory side of it, I think you highlighted some of the point that, okay, up to what level there's a regulatory license and all is required. So permit and licenses up to some levels, maybe, I mean, I would be more ambitious, but maybe 2, 3 megawatt. That can be more streamlined in a way and can be more easier for businesses as well. I think those things can really help a lot. On the regulation side of it, also, see, I mean, there has been a lot of talk about net metering across Africa, but more often than not, even in some geographies, it is more in the form of credit and offset. So that, I think, that is something which can really help a lot in the businesses where you don't worry about, okay, I mean, end of the day, you are sizing your project for your own consumption. But if that benefit is there in terms of additional revenue or something, that can really help businesses.
Yeah, I mean that makes a lot of sense. They're kind of creating additional revenue streams where the solar and storage project actually becomes an asset. I've got a question from Mohammed joining from Dakar in Senegal. So Herbert, you seem kind of perfectly placed to answer this. He maybe going into a little bit more depth on your perspective on the CNI market growth in West/Central Africa. Yeah, can you share a little bit more other than the kind of reactions that you gave at the start of this discussion for Mohammed?
Thank you, Mohammed, for the question, and Benjamin for the opportunity. So I think generally in West Africa, what we see is that there is a disparity between the installed capacity and the operational capacity in the countries when it comes down to the grid. And therefore, you often see that the grid operators are a little bit hesitant to welcome solar into the mix because they look at it as a commercial threat to their income, but also they are afraid that when C&I customers start installing solar on their assets, on their roofs, on their carports, on their facilities, that may have an impact on the grid itself, and this is a misunderstanding. I mean, especially the C&I market within the West African region, which is behind the meter C&I in general, for the largest extent, has absolutely no effect on the grid itself in terms of its working methodology. Yes, there is of course the necessity of using the infrastructure of the grid in terms of the frequency in order to make your systems work. But for the rest, there's no flow of solar power going into the grid. So that fear is ungrounded and is very often used for the regulators to put a hold on the growth of C&I solar in the West African countries. Now, on a more practical note, we see that companies greatly benefit from C&I solar. I mean, not only is solar a proven technology that we do not longer, like Rita already said, we don't have to explain anymore that it works. It is a solution that works, whereby proven technology needs to be used for the implementation in countries like West Africa. We don't want to experiment with new technology. You know, the solution, yesterday's technology is today's solution. And I say that because you want to see and work with companies that have that conviction that you need to make sure that the technical solutions that you're going to offer and use in your system are proven to the test of time, and that are proven to the test of the specific geographical challenges that some of the West African countries bring with them. And I think of Harmattan periods, I think of excessive rain, I think of very sharp distances between a beautiful sunny high irradiation day with suddenly cloud forming coming into play. So it is very important to work with tier one materials, with EPC contractors that understand, that have the reference and that have done projects and that have proven that they can do this and that it works. But also to look very critically at your load profile, because if you don't do that and you end up with, let's say, very opportune offers of services, then before you know it, you have an oversized system that you've paid for that is not effectively doing what it's supposed to do. So I would say that as a taking back on that question.
Yeah, no, thanks for that. And interesting that you brought up tier one suppliers, because that leads me very nicely on to Rita. So I mean, Herbert was talking about the sizing and so on and so forth, but a question that I have on the technical side is so roof profiles vary a lot, right? So if you're doing a behind the meter or rooftop solar installation, there might be older industrial roofs with load limits versus greenfield ground mount for mining. Is that essentially driving demand for lightweight modules, or is there a kind of, or is the DC AC ratio and inverter loading the kind of the biggest lever for maximizing yield on constrained sites? What do you see?
Look, I would say it's actually a combination of both, depending on the application. So in retrofit projects with older industrial buildings, structural loading is often the first design constraint. So module weight and mounting design become critical. On newer commercial developments, we seeing developers optimize DC to AC ratios to maximize energy production throughout the day and improve project economics. What we're also seeing is higher efficiency modules allow customers to generate more power from the same roof area. That's becoming increasingly valuable where roof space, not budget, is the limiting factor.
Mm.
Efficiency is now one of the biggest financial drivers in the CNI projects. Yeah.
No, I mean that makes sense, especially if especially as it's now becoming kind of the main economic and energy backup for your power supply. No, that makes perfect sense. So there's a question that's probably for you, Bhupendra, in the Q&A from Amin Lakhani. How are investment firms hedging against country risk, currency risks, and other risks of doing business in whatever country they're doing business in?
Okay. So thanks, Benjamin. See, I mean, when we started working on this fund, the idea was that we are going to support Africa for the CNI solar value chain. So from that perspective, obviously, I mean, I mean, see, when you are targeting a certain geographies, you have certain risk appetite. So we work with a certain risk appetite when we work in this geography. So that is one. Now, see, I mean, at a macro level, there are, I mean, certain risks, but when it comes to individual transactions and all, obviously, uh, transaction level risk we try to mitigate through, let's say, obviously, one is the developer profile. We look at their track record, how good or bad they are, how prudent they are, and how much they have done in the past, the pipeline, what they are proposing to come for these transactions, and have they done something like that in the past or not. So that is one aspect of it. Second is obviously on the off-taker side of it. So it is always a balance. So we look at the off-taker credit profile as well, because you cannot just go ahead with the developer credential. So end of the day, there's an off-taker who is paying back to either developer, and that in turn may be coming back for debt servicing. So that is another aspect where we look at and we try to optimize. Although, I mean, as we said, I mean, we are trying to support the sector, so we try to create a combination of it. So generally, Benjamin, the way we work is we try to consolidate and combine multiple projects in a single transaction. So there is always a diversification of multiple off-taker, which to some extent reduces risk. So that is also one aspect. So sometimes what happens is there may be some off-takers which may not be that great in terms of credit profile, but since we are combining multiple off-takers, so we are still able to do those off-takers as well. So that is, and obviously then on the debt sizing, on the technical side, a bit more like, I mean, you are looking at tier one suppliers, their proven track record, and then on the debt sizing, you can be a bit more conservative, right? Now, coming to currency risk, that has been something which again is a big challenge in Africa. The way we operate across geographies, we have been trying to work with a couple of like MFX and TCX. They are the major currency hedge providers in Africa. So wherever there are transactions where there is no natural hedge, or there are underlying contracts are not in dollar, or their revenues are not in dollar, we try to create a hedging solution there. So those are a couple of mechanisms where we try to I mean, hedge our risk, be it on the transaction, be it on the hedging. So that's, yeah, that's how we work on this.
So a kind of portfolio approach to reduce exposure to one particular off
Definitely.
taker.
And yes, yes. And if I can add one more thing here, I mean, obviously at the country level also, we don't want to overexpose to a single country. And from the off-taker sector also, we don't want to overexpose to a single off-taker. So we have a certain concentration limit. So like, I mean, I can do, like every country, we have a certain limits that I can do 20% of the fund for, let's say, Zimbabwe, Kenya, Nigeria. And then from the sector perspective, let's say if I'm doing manufacturing as a sector for off-taker, so there also we have some cap. So those are some other aspects where we try to not overexpose and add more much needed diversification in the portfolio.
I mean, makes perfect sense. But yeah, thank you for that, and I hope I mean that's answered your question. Herbert, there's something I've been wanting to ask you. So a lot of projects I see happening in West Africa now have been kind of EPC and O&M contracts for an asset owner, not really kind of developer-owned PPA assets necessarily. Is that kind of the default model for West Africa now, for CNI certainly? And are clients now expecting that financing is prearranged, or do most already have it in place when they begin a kind of journey towards getting a CNI installation? How does that work?
So what we see is that still EPC and O&M, let's say, contracts for CNI solar is very much on a what we call outright purchase basis, an asset owned basis. Not in all cases though, but we see it a lot here, and I think that has to do with the background of the regulation and the history of the regulation also in West Africa. We've seen in West Africa when solar started its initial growth, that the regulators also picked up on it and started regulating it, and moratorium were put in place, and there were, let's say, it was made more difficult for bulk customers to comply to, let's say, signing PPA agreements. So there was no other choice for people than to move to outright purchasing and capex based business models. However, the more sophisticated clients come with their own financing, especially when it comes to the larger CNI projects, the ones above, let's say, 1 megawatt and up. But the ones below are often still asking for what the possibilities are, and the possibilities nowadays are quite flexible. You know, we work with a number of financiers that are, let's say, flexible in whether it is on a PPA basis, whether it is a solar as a lease, or whether it's a conditional sales agreement. Even though, again, the regulator would like to see, first and foremost, that the asset changes hands at the end of the term. And also that the solar as a lease is not for a long period of time, because then it would basically be very similar to a PPA, which seems to be a business model that not every West African government likes. So listen, the prices of solar nowadays allow for a very quick payback period. You know, we're currently looking at a period between 2.5 to 3 years on the majority of the sizable CNI solar systems. And also, don't forget, a lot of the asset owners, they want to be seen as the owner. They want to have the full benefit of, let's say, the renewable energy certificates or the advantages that they can have with financing through carbon schemes. But they also want to turn their existing normally idle sitting assets like roofs, like land, like car parks, immediately into profitable centers. So the capital availability, in my view, and with all the clients that we speak to, should never be a barrier. There are so many companies that are willing to enter into the discussion providing funding. And the relation to the local regulations on the currency are, of course, of a very big influence. What we also see specifically in Ghana, and that has to do with the recent stabilization of the CD that has taken place throughout 2025 and going into this year as well, is that the banks now become more and more interested to also directly offer financial services based on green investments to their clients in the CNI atmosphere. So yeah, so it's a mix. It's a mix of flexible financing options, owners that may have the capital and therefore want to deploy that capital in green energy. But you also have CNI customers who basically want to use their own capex to improve on their and increase on their production capacity, and rather go to a financial scheme in order to have that finance their renewable energy needs.
I mean, that makes well, I suppose that's a good thing that there's such a diverse array of ways of financing a CNI installation. Rita, I want to come to you as well on the financing side, because yeah, does ICO extend vendor financing to bridge developers to close? And how does that shift by kind of market payment risk? How much of landed cost is now duties and logistics versus X works price? And is local assembly changing that at all from ICO's perspective?
To put it in a nutshell for you guys, ICO's primary focus is delivering high-performance module technology through our distribution and our EPC partners rather than acting as a project financier. What we do focus on is improving project bankability through premium products, strong warranties, and long-term performance guarantees. Financial institutions increasingly evaluate module quality because long-term energy production directly impacts cash flow. As far as the duties goes, over the last few years, we've seen logistics stabilize compared to post-COVID period. Today, import duties, exchange rate, volatility, and local regularity requirements often have a greater impact on landed cost than freight itself. That's why strong local partnerships become essential. They help customers optimize procurement while reducing commercial risk.
I mean, that makes sense. And I've got two questions to pose to all of you to kind of wrap this discussion up. So number one is from the Q&A, which is Benjamin Gitonga. Other than regulatory approvals, what are the main risks of slowing down developers in project delivery, especially outside of South Africa? Now, we're not going to limit ourselves just to outside South Africa. We're going to talk about inside South Africa as well. But yeah, your quick reflections on that question. Let's start with Bhupendra, please.
Yeah, so I mean, see, other than regulatory approval, one is I mean, what I feel is developers. I mean, there is a need to build capacity building also, because when it comes to commercial contract negotiation, at least we have seen in our experience, it goes on and on and on for 3, 4, 5, 6 months, and it doesn't end there. So there, I feel solar companies, be it EPCs or be it IPP, they need to educate the customers in a better way that what they are looking for, what is the value proposition there. That is one. Second, and obviously, I mean, what is the savings and all they derive. So that is one. Second is on the capital hands-on. I mean, because equity, I mean, more often than not, we discuss, let's say, if I have a discussion with 50 companies, at least 90% will come up saying that, okay, there's an equity issue there. And that's why they don't want to offer the solution as a PPA or leasing to their customer. They want a financier to directly finance to their businesses there. So those 2 points, yeah, from my side.
Thank you very much. And Herbert, let's come to you next for those risks.
Sorry?
Yeah, other than regulatory approvals, what are the other main risks slowing down developers in project delivery, especially outside of South Africa?
Yeah, I mean, obviously we all see what's happening around the world now, and influences that are way beyond our shores are influencing, let's say, the delivery time. We see that, for example, now in the whole crisis between the US with Iran and Israel, that even though it may not be on your route, it does have a knock-on effect of the entire freight delivery, and that is not only on time-based issues, but that's also financially. Other things that one needs to take into consideration, especially in countries that we operate in, is the geographical conditions that can cause, let's say, have delays. There is no way that you can run battery storage on a low bed over a sand road into certain regional areas where we are operating. In a rainy season, for example, you'll get stuck, your equipment will get damaged, it will never reach site. So you need to get your planning in order very, very carefully. My view is always the regulatory aspect is definitely one of a delay. The lenders have a checklist that is, of course, based on the Africa risk, and that is also a very lengthy process if you're not careful. And having said that, I personally think the Africa risk is something that needs to be looked at more critical. I mean, risk to me is something that can be managed, and as long as you can manage it, it should not become a risk anymore, but it should become a decision based upon which the lender's checklist will also need to change. And that has to do with the fact that is the lender a credible company? Is the EPC contractor a credible company? Is the country itself ready for solar? Because if you don't answer these questions correctly, then it will definitely have a delay on the execution of your project. And if you're not careful, you can get stuck for years into the development side of things before you start executing. But when it comes down to execution, it's the choice of technical solutions, the timing of your ordering and the timing of your shipment. And therefore, as an EPC contractor, I always say to the lenders, guys, everybody benefits from discussing a transparent payment schedule when it comes down to executing a project. Nobody benefits from holding money into a bank account whilst the money into the account of the suppliers and money in the account of the EPC contractors can actually speed up the process of executing a project. So that would be my contribution to that question.
No, that makes that makes perfect sense. It's kind of a reappraisal of how Africa of how risk assessments across African nations are done, and then making sure that there is a transparent and smooth flow of money from funder to supplier to EPC and everything like that. Reader, let's get your thoughts on that, and then we'll close out as well. Main risks.
Yeah, I fully agree with what was said by my colleagues over here. A lot of the sentiment is shared on my side. For me, if I would have to choose one, I would say project financing linked to customer credit quality. That's a big factor. One of the other things, technology is no longer the limitation. There's so many options these days. High efficiency modules do exist now. Battery technology has matured rapidly. We have, again, more brands, high quality. The EPC capability across Africa continues to improve. People are getting better at what they do. The challenge is creating financeable projects where lenders have confidence in the long-term revenue stream. So, yeah, on the positive side, I would say the biggest opportunity is education and demonstrating a return on investment. Businesses in manufacturing, hospitality, agriculture need to see clear cost savings, energy security, and predictable payback period. Combining the right financing options with reliable technology and strong after-sale support will help accelerate adoption. That's my take on that.
Yeah, that makes sense, and I think it would be a good would be an interesting exercise to undertake. Do a sort of performance evaluation of various CNI sites in a country across a particular segment to actually quantify in real terms what those cost savings could be. But Pendra, I saw you had a hand up and it's disappeared. Was that by
Yeah.
mistake or
So
was that
no,
by?
I did that. So I mean, I think, see, the related point which Herbert and Rida said. See, I mean, lender or any investor, I mean, will always take comfort first. A developer has to take that comfort there, right? So I mean, at least we have had many discussions with South African companies or even other companies also when they try to step out of a certain geography. Their confidence in the customer itself has to be there, right? I mean, if they, let's say, they don't want to take the, let's say, 2 years, 3 years exposure there in that market, then how a financier or investor will take? So, and see, I don't blame a developer here. The problem is really with the off-takers also sometimes, because I mean, see, you're not always dealing with blue chip off-takers, right, or customers. So, and if we have to support that market, so I mean, there's no clear answer to that. But if suppose some support from maybe multilateral, from government, at least to that end, if it can be provided to maybe SMEs or those small industrial and commercial industrial customers, uh, so that can really help a lot building that comfort with developer also and with investor or financier also. Otherwise, what will happen that people will just finance blue chip, bigger companies, and it will be difficult to get funding for smaller and mid-size, uh, I mean, off-takers.
Completely agree, and obviously, those are also some of the biggest motors of economic growth. So it's important that they are able to have access to it as well. So we are a little bit over time, so apologies for that. But thank you to the over 130 people that are still here. So thank you so much for joining this. I hope it's been insightful to you. And I would like to thank the three experts that we had today. So Bhupendra Yadav from SEMA Funds, Herbert Fraser from Dutch & Co, and Rita Ori from ICO. Thank you so much for your time and for your insights. It's been incredibly valuable. And well, we will be back with a date for our Q3 market intelligence webinar. The presentations and the recording will be shared with all of you. But for now, have a good rest of the week, and we will see you soon. Thank you very much, everyone. Goodbye.
Thank you, guys. Thank you.